Just to remind everyone that I don't have an AFSL and everything in this video is for educational purposes only. Okay, gold and the spot price. So I've been posting a little bit about gold lately, talking about that it potentially could be turning around at this point. I want to look at the charts and talk about why I'm looking at that and the possibility and the things to what charts to look for so that you can know in future times, you know, how I can come to this conclusion yourself. So first thing you obviously look at is the spot gold price. And like I talked about last time I did this video, is that it was in this cup and handle pattern, and it's actually still in this pattern even now. So we've gone up, we've done the cup, we've had a high handle, and it's still ranging within this right now. Going off what Gann also talks about is that, you know, you've heard of a thing called a double top, you've heard of a thing called a triple top. You've never heard something called a quadruple top, because often the fourth break is the time that it actually breaks through. So we've now had 3 touches, 1, 2, 3. What often happens if it is bullish movement is that it will retrace 1/3 to 2/3 of this move, which is what it's doing. And then if we come up for a fourth go, it'll often break, just like what's happened recently on uranium. So yeah, if it does start to come up and we start to come up and back through these levels, I would be looking for a breakout and then a move to the upside, which would be a measured target of your cup and handle. Let's actually dive into the chart and have a look to see where, because that's the monthly chart, where on the daily or weekly that we might be looking. Okay, so here's your gold chart on the weekly, and you can see where we are right now. This zone along here is an area of demand multiple times before. You can see price action has reacted here a lot of times. Reacted, 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 reacted. Okay, reacted, reacted, and now we're here now. All right, so this kind of 1800 kind of zone is a pretty crucial support, because again, we are technically still in an uptrend while we're holding this pivot low here as well, because we still have a higher high, higher low, higher high, higher low, higher high. We still have a high low. We haven't actually broken market structure on the weekly yet. Okay, even though we're going lower low, lower high here, we haven't technically taken out this low. Going off Elliott wave as well is that it will often, once you have your wave 5, it'll retrace the whole wave 5 and come back to the bottom third of that wave 4, which is what it's done as well. Also going off Dow theory, for every push, you get a 1/3 to 2/3 retracement. That is very, very common for it to come back to this 382618 zone, which is where it is right now as well. So technically, while it's above 1780, it's still okay. It might even come down, grab a little bit of liquidity from shorts, whatever from here as well. But somewhere in this kind of 1780 to 1820 zone is a zone where you would be expecting some buyers to step back in, because they have historically stepped in as sellers or buyers around it. It's an area of interest for gold. Okay, so that's what you're looking at on the weekly. At the moment, it's down there. You've had a massive sell-off, okay? And it's starting to, you can see the candles kind of tell you a story. Nice, big, long candles, strength, and then see how they're shortening up. You can see some buyers are starting to step in around here right now. Okay, we are quite oversold. You'd be expecting at least a little bit of movement from here going down to the hourly. Again, you can see bullish divergence off these moves, and we're starting to move a bit. So it's at least moving into a bit of a range down here. Whether or not it holds, we don't know yet. We've got some signals. We need the confirmation for it to actually change its market structure and bounce off out of here. Okay, once you've analyzed gold, the next thing to look at is your gold miners. And the first one I like to look at living in Australia is the gold miners in Australia. So you can see last time we were here, we were approaching this resistance. This is when I did the video, Will Gold Shine? And we were coming up towards this resistance. Let's see what it did. Did the sellers step in at resistance? And where are we now? Okay, so same thing. What we've had is, we had a falling wedge here come down. We've had our 5 waves up, impulse wave. You've now had a correction down to the bottom thirds, wiping out that whole wave 5 as well. Okay, getting quite oversold again now. It's been coming down on lower in volume, which is good as well. So all these kind of things are signs of a corrective move again. same as gold, it's come down to the 1/3 to 2/3 of the move. So as long as it holds around here, which is a common retracement, like I said with gold, it's actually still above that pivot. So it hasn't broken market structure yet. All it's done is come down and finding support where buyers stepped in last time. As long as it holds that level, and I mean holds on a weekly candle close, not like a bit of a liquidity grab come down. As long as it holds that and doesn't keep following through, it's still got some life. It does have a gap here. You can see right there. So you've just got to be careful that it doesn't come down and grab liquidity, fill that gap, and then bounce out from there. Okay, that is definitely a possibility and something to look for as well. Again, very early days. There's no signs of, there's some signals that it could bounce around here, and there's no actual confirmation or change of market structure yet. Looking at the smaller time frames, we've had bullish divergence, a bit of a weakening trend here, and we're starting to change market structure on the hourly. Higher high, higher low, change back up here. Okay, some good early signs. But again, that's just on the hourly. It could just be a corrective and further move down. Okay, we need to see change of market structure on the daily, then the weekly, then the monthly, to then know that the trend is going from short term into longer term. Okay, after the Australian miners, I like to look at the American miners as well to see if I get fluency from what's happening in America as well. So let's dive in the American charts and see whether or not they are saying the same thing as well. Okay, so we're in a clear uptrend. Okay, wave 1, wave 2, wave 3, wave 4, wave 5. And then on that, you can see that we had a very clear reversal signal right there. Double top. Okay, higher, 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 all of a sudden equal high, change of character. Then once it breaks below the pivot, double top is confirmed. Then it's been printing lower low, lower high, it's been going down. All right, so our key zone now is this zone here that we're looking for it to get up to. Same thing as before, it's come back down, it's retraced the wave 5 move, which is what it's supposed to be. That's when your retailers turn bullish. If you were around social media during that time, everyone was bullish on gold around that time. That's your dumb money coming in. They then get wiped out. That's very common. They make people forget about gold again, things like that, before they then start to move it again. All right, that's how cycles work. Otherwise, if everyone just remained super bullish, everyone would make money and be rich on the stock market. Same thing here. This one's been coming down on lower in volume here. So you can see we've got divergence here from this low to this low, and which is a good sign. You want that in a corrective move for it to be coming down on low sell pressure. So at the moment, it's looking like we've had 5 up. We've had our retracement, but we need to get a high low out of here. We are oversold. You can see we're getting a bit of a bounce off this trend support here. Daily, let's look at the hourly here. Yeah, same kind of thing. You're getting this falling wedge off its support zone, but still very early days. We need to change our market structure. Bit of divergence here, which is forming the bounce, but we need to then change our market structure and bounce on out of here as well. Hourly market structure needs to turn daily into weekly into monthly, blah, 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 blah. All right, let's look at the next chart. All right, this is your gold miners against gold ratio. All right, and the reason I look at this one is because gold miners are historically in bottom range, not seen since the GFC. So historically, they are undervalued. When a commodity enters a true bull market, the miners will always lead the rally and outperform the commodity. Okay, because they will outperform. Because if you think about it, something like Northern Star, I think, has all-in costs to get out of the ground about $1,500, say. Okay, and if gold's at $3,000, that means they have a profit margin of $1,500. If all of a sudden gold goes up $1,000, the cost to get it out of the ground doesn't go up, so that's all profit. So now instead of only getting $1,500, they're now getting $2,500. Their profits have doubled. So if their profits have doubled, their share price would double. But the gold price hasn't doubled, but see how it kind of goes up with. Okay, and then it also means they got more excess cash. They'll pay a high dividend. So that's why a lot of big money will flock to the miners. One, because if the commodity goes in a bull market, they'll outperform even more. And then also they will pay a dividend, whereas gold doesn't pay a dividend as well. All right, so let's look at that chart and see what that one's doing. Okay, so I'll just break down this chart a little bit for you. So whenever this is the gold miners against gold. Okay, so this ratio can't go up forever. What it's showing you when it's up around this 0.3 range, miners are expensive. When they're down around this 0.23 range, they're considered cheap historically. Okay, so whenever it come up here, the gold outperformed miners, gold outperformed miners, gold outperformed miners, gold outperformed miners. When it came down here, the miners outperformed gold, miners outperform gold, miners outperform gold, miners start to outperform gold. Okay, what you can see is the last time we were down around this range, the only other 2 times we've been here was here, which was the very bottom of COVID, and here, which was the bottom of the GFC. Okay, 2 very, how would you put this? 2 very, very good times to buy if you were buying pretty much anything during those times. Okay, so down there, what we have now done is you can see from this low to this low, we've got bullish divergence, and then from that low to that low, we've got bullish divergence. So this has come down into a double bottom. See how it's gone lower low, lower high, lower low. All of a sudden, there is no lower low. We have an equal low. So for whatever reason, there's demand here. It's now come up, broken above this neckline. It's now testing it as support. This is what's called a double bottom reversal. As long as it stays above that neckline, that is a reversal pattern. So at the moment, what it's showing is that gold miners should outperform gold, which is what we want. So that's a good early sign. Again, this is a leading indicator to let us know that if the gold money's going into the gold miners, that means that they believe that gold will perform well in the coming years, because then that means that the miners will perform well as well. Okay, next chart I want to show you is the gold junior miners against the gold miners. What this does is it shows you the risk on within the asset class. Okay, because if the junior miners are outperforming the larger miners, that means that money's starting to pile into the riskier part of it. It means that they believe it's about to go into a bull market. Okay, this is what I showed you with uranium before it lifted off and went ballistic as well. Let's see if the same kind of thing is happening with gold. Okay, so as you can see, gold junior miners have underperformed gold miners for a long time until they found a floor here in 2015. This is when gold bottomed. And then it's found another floor here, 23rd of March, COVID bottom. And now it's found a floor here as well. What you can see also is bullish divergence as it's hitting. So you can see it's hit here, 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 and this is going higher, 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 higher. On top of that, volume has stepped in, and this move here has come down and lowered volume, which is a good sign as well. Okay, so there are some signals of it that it's been accumulated, the junior miners over the gold miners here. However, we still need that confirmation of it to bounce up, and what that would be then is if it double bottoms here, gets above this neckline and starts to go off. Okay, I'll show you the same kind of thing that happened with the junior miners in uranium as well. Okay, so this was the one I was showing you when this was all happening down here as well, and see how every time it comes down, 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 so these triples, and this is going higher, diverging. On top of that, increase in volume, buy pressure coming in on it as well, showing that big money is accumulating this as well. All right, which then when it broke out of its double bottom, boom, pops. All right, so similar kind of thing. But again, we need to wait for the confirmation for it to actually do it. Okay, this is the data gold ratio as well, which has historically shown us major macro trends where gold has outperformed equities. What I've overlaid it here with is also the Shiller PE ratio. So this blue line is the Shiller PE ratio. You can see down here has been historic support, and then up here is when gold is considered expensive. So we're down on this major support down here that it's only ever been down here 3 times prior. The tech bubble, inflation, energy crisis, and Great Depression. 3 very significant turning points in equities. Great Depression, stock market fell out of the arse. Inflation, energy crisis, it went sideways for over a decade. Tech bubble fell out of the arse. And then COVID fell out of the arse. And then we're here now as well. All right, so what this has shown you is decade-long trends where gold has outperformed equities. Doesn't mean gold's going in a bull run, it just means it has historically outperformed, which means they could both go down, it just doesn't go down as much as well. Okay, you'll also notice that the Shiller PE ratio, whenever it was at historic tops, is when gold was at historic bottoms. So Shiller PE ratio was 30, gold bottomed. Shiller PE ratio was 25, gold bottomed. Shiller PE ratio was 45, gold bottomed. Shiller PE ratio was up around the 30s, gold bottomed. All right, the Dow ratio bottomed. So what it's showing you is historically when equities are overvalued, gold is historically undervalued. That's what that is showing you. The average PE is 17. So we're still we're double from the average, and that's the average. If we get into a bear market, it can go lower. See, lower, 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 lower. Okay, so the average has it come in a lot further down. If we go into a bear market, it can still go much lower as well. All right, another thing to take notice of. On top of that, matching that Shiller PE ratio, you can see we've hit the top of this resistance line, only touched twice before. Tech bubble, Great Depression. The last 2 times that equities were above 30 on the Shiller PE ratio as well. Okay, last chart I want to show you is the yield curve. Okay, and the correlation that it has with equities and also the correlation that it has with gold. So historically, when the yield curve inverts, a recession comes many months after. That's what this one's showing you here. Okay, so after the yield curve inverts, it's often a leading indicator that a recession will follow around 20 months afterwards. Okay, so these are a few of the key recessions that have happened afterwards. And you can see that the bottom didn't happen for 18 months, 20 months, 60 months. So it can be, you know, quite a massive amount of time afterwards once it finally inverts. The actual biggest crashes on the market happen once the Fed pivots and this thing starts to uninvert. The reason why is because often it's because something is broken that bad that they have to intervene in some way. As you can see, we have come down and we've changed market structure and done a double bottom for the first time since inverting. Right, so we've changed market structure bullish in the yield curve. Historically, looking at this chart, once it uninverts, so it comes back up again, gold has gone on a bullish rally. It uninverted here, the Nasdaq fell another 40%, gold went ballistic. Here, during the GFC, equities fell another 50%, gold kept going. Even the COVID drop, equities fell, gold pumped. Okay, so going off history, if we've now uninverted, gold should perform really well. I'll show you on the charts. Okay, this is last time the yield curve uninverted. You can see we've come high low, we've broken out, just like we have now. Okay, that date was the 24th of February, 2020. Here, 24th of February, there. All right, so gold sold off initially a little bit, but then what did it do? It pumped. Whereas the stock market absolutely got smashed for another month. Okay, so gold bottomed prior to it. But there was a little bit of a sell-off beforehand, which is what we're seeing now as well. But one piece of evidence, let's go and get some more. Now let's go to the GFC. Okay, when the yield curve uninverted, we've come down. Here, we've broken out above our range and we've started to go back into an uptrend. This was when the GFC, when the equities fell another 50%. With that same date, 16th of July, 2007. 16th of July, 2007. Oh, back here. About here. All right, so there. 2nd of July, sorry, 16th of July. Around there. What did gold do? It went ballistic. It went from 630 bucks to 1,000, so up nearly, nearly 40%. Oh, actually more than that, isn't it? What did that go up? Price range. Yeah, my 60%. So gold went up 6%. You can imagine what gold miners did during that time as well. However, it did start to then retrace it, but then what did it do? It then kept pumping. All right, so looks like when that uninverted, equities got absolutely smashed. They fell 50%. Gold went ballistic. It did retrace, but then kept going ballistic. All right, now let's go to the next other time it uninverted and came back up. We have the tech bubble here. All right, uninverted. This was 5th of September 2000. Tech bubble crash. All right, let's go down to that one. You can see that one is 25th of September, about here. What did gold do? Went ballistic. Okay, so another time. So you can see why I'm looking at potential turnarounds in gold, because historically when this yield curve uninverts, gold does really well because that's when the equities possibly could crash, fear, things like that can bring it in. So on top of that, there's one other thing I want to show you. What I want to show you here is Northern Star, which is often considered our best gold miner on the ASX by all the experts and stuff like that, fundamental wise, and gold. And the reason why it's also considered the best is not only the FA, but money will always fly into that first over other gold miners. Because if you think about it, big money wants the best of the best because they're the safest one. Okay, just like, you know, the bottom of the GFC, bottom of tech bubble, things like that, things like Apple and all that always bottomed prior to any of the other things because big money wants to get that as cheap as possible. As you can see here, during these dates here, Northern Star actually bottomed on the 11th of July, 2022. Gold didn't bottom until October. Okay, so this one actually bottomed many months before. Okay, that is what's, going back to Dow theory, divergence in your charts. Why has the gold miner bottomed prior to the spot price? Because big money knows that gold was close to bottoming, and then that they start accumulating the asset prior to, because then they know that once gold does bottom, everyone starts looking, they need to be in early. Okay, because they can't just buy their whole position in one hit. Same thing is happening now in Northern Star. As you can see, it's come down. It's had a beautiful 5 waves up. 1, 2, 3, 4, 5. Had its retracement. Retraced the whole 5th move. 1/3 to 2/3 retracement. Okay. But what you can see here is it's actually double bottomed here, and buyers are stepping in here at $10. It's now pumped up nearly 10% just in a few days. But gold's still been making new lows, and it's actually, see the divergence? It's made a new low. This hasn't made a new low. So the same thing that was happening here is happening here again right now. Okay, divergence in the chart, similar to what happened back then as well. Okay, these are just very early signs, but things to take notice of. Why is institutional money buying Northern Star here now if gold's still making new lows? Possibly because they believe that that zone I talked about, that 1780 to 1800 zone, is a zone that will be bought up. Okay, doesn't mean gold still can't keep coming lower, but they are going into the miners first because miners will lead the rally. All right, so this is one to keep an eye on, see if this move keeps going on. The confirmation does not happen until we get above this $12 zone here. We get above there, we've got a confirmed double bottom, we get back up. Still very early days, but definitely some signs to look out for as well. So as you can see here from the gold seasonality, gold does quite well from the September-October period, going into Christmas, going into that kind of February-March kind of period. As you can see here, October, we bottomed, we had a strong rally up until that kind of March, April kind of period. And then we've had weakness, the weakness. Okay. So seasonality wise, as you can see here, we bottomed around that September, October last time. We are September, October again. Seasonality is when gold performs well as well. Okay. Again, these aren't perfect things that are always aligned. Just like our season, summer doesn't always start on the exact date and winter doesn't always start on the exact date. They're just rough guidelines that, typically around that date is when the weather gets hot or gets cold, and some winters are extremely hot. Some winters are extremely cold. Some aren't as bad. Okay, there are severities in different magnitudes on the different seasons, just like the same thing happens on the stock market as well. All right, so it doesn't mean that exactly the same performance will happen again or things like that, but it's just another bit of data to help confirm what you're already looking at within those things. All right, guys, hope that helps. Please like and subscribe if you like the video. Comment something in the section around what your thoughts are on gold. And also, if there's something else that you guys would like me to do a video on, please let me know and I'll try and get on ASAP. Take care, everyone.